Hi, this is Randy Finney with the Right Side of the Chart, and today is Tuesday, June 5th, 2018. Wanted to cover commodities in this video. We'll take a look at various agricultural commodities. We'll start out here with crude oil. I did touch on this. I covered it in the earlier video today, but it's worth mentioning. We've seen some movement recently. So we'll start out here. This is a daily chart, daily time frame of USO. And the story was this divergent high we've had recently put in. You can see the clear negative divergences in crude, just like we had a smaller divergent high back here. You see these little trend lines down here and here. That divergence led to a correction, which then took us back to the trend line. We continue to test that trend line after this divergent high. You can see technicals played out very well. Crude was on an extended. It reminds me of the broad markets right now. It seemed like a run that just any dip, any pullback was being bought. Divergences were being, at least on the 60-minute chart, being defied. Crude seemed like it would never roll over, and then boom. What happens is you get a one-sided trade. Everybody's long, nobody's short, everybody's bullish. This is what happens. You had a swift correction down. S1 I had at the time, meaning support level 1, which is the trend line. That's what we tagged right there. Kissed the trend line, bounced. Had a couple days of a bounce after touching the trend line, and then have since broke down. So most importantly, where we're going right now, we are well below trend right now. And again, that was a very well-defined trend line. So that puts me, that coupled with the fact it came after a large divergent high, puts me intermediate term bearish on crude oil. However, I am near term bullish. When I look at the 60-minute chart, I pointed this out earlier today, and as well as yesterday when it was forming, we have this was a larger rising wedge on the 60-minute time frame. This is probably that same trend line here that we had on the daily chart, except it doesn't go back as far on this 60-minute chart. But either way, you can see we gapped down, broke down below it on a gap. Then boom, continued next day, we gapped even lower, had an impulsive sell-off. And so what that's done at this point in time, it's put in this wedge type pattern. Now, keep in mind, it's a counter trend trade, so I'm not getting married to it. I did take a long position. I'm not adding it as an active trade right now because we may go lower. This was, again, crude. When you have these excessive, bullish runs, with sentiment at extreme highs, usually the ensuing correction can be pretty swift, at least in the beginning here. So, as of now, that looks good. I take it on face value. Here's a nice, strong divergent low. I like the clean separation of the PPO. I like this divergence, but I did just wanted to point out that crude certainly has the potential to go a little lower, maybe down to this 1283 area, if this breakout doesn't get any traction, into tonight, into tomorrow's session. And if so, that would just give us a larger divergent low. So we may have another opportunity to add to a long position taken here, or if you didn't take any, maybe come down, backfill that gap around 1283, and then see crude reverse. But as of now, it's hard to say from looking at this chart whether we're going to go have another thrust down before we move up, or if we'll continue to rally from here. If we do, my targets are right here, 1358. Is my preferred swing target right now, with an uppermost target of 1395. We'll just have to see how that plays out. And again, that would probably give us, as I think I mentioned the video earlier today, have a scenario where we come in and maybe back test this trend line from below. I can easily see that happening if we get a little more upside here in crude oil. Back test the trend line, and then maybe roll over after that. So that's one scenario. Let's look at crude futures. I always like to look at crude futures when trading. It's my preferred trading proxy, but I will trade the crude ETNs as well, particularly in certain accounts that I have. You can't, in IRAs and accounts like that, you can't short futures, or only way to go short is using those leveraged ETNs. So here's that 60-minute bullish falling wedge on crude futures, symbol CL. Again, it was pointed out in the earlier video. So far, so good. There's a breakout. We rallied. It was, some impulsive follow through afterwards, and then crude kind of stalled out a little bit. It looks like it's, if I really zoom in here, it may be flagging at this point. And that would actually be very nice to see if this is a bear flag. I'm sorry, a bull flag. You can see right there. If this pops and plays out, then it would look something like this. Need to put a arrow tool here, something along these lines, pop on up. But either way, if you're trading CL, these are my targets here. They're unadjusted. These are the actual resistance levels. So best to set your price targets or your sell limit orders a little bit below that. But I have 67.15 is my preferred target right now with a potential target of 68.41 depending on how things go. That's CL Crude Futures on a 60-minute chart, and here's what it looks like on a daily chart. Almost identical. And the thing is, USO does a pretty good job of tracking crude. Some ETNs track commodities such as natural gas, like UNG. They don't do such a great job. They don't mirror the charts at all. There's a lot of, I don't know, it's contango slippage. They just don't track their futures as well. But crude does a pretty good job. And you can see, again, this trend line looks a lot like that USO trend line. Divergent high, same negative divergences, same impulsive move down. Just like USO, we hit the trend line from above for the first time since early April, back tested or successfully tested it for 4 days before we gave up the ghost. So this helps formulate my longer term picture. This is a breakdown below a well-defined uptrend line following a divergent high. And so at best, I think right now, and maybe things change, but right now at best, I see a kickback to back test the trend line. These two horizontal lines, you can see the levels there, 68.41 and 67.15. That's a resistance zone, and that's where I would expect any near-term rally to fail, most likely on on CL, somewhere in that area there, that range. All right, moving on. Okay, let's look at ag commodities. I have a watch list below, so we're going through these in no particular order. Sugar, although not an official trade, it might as well have been. I've been highlighting this one a lot recently since down here. We had this divergent low. I pointed out it was challenging the trend line, then it broke out, highlighted that, and it's moved, and all along in the updates, it's steadily advanced. However, we've seen, other than the previous 2 days before today, had some very impulsive selling. Quite odd. There must have been something going on, some news with sugar. I don't know, maybe some weather crop damages or something somewhere. That's a pretty impulsive selling out of nowhere, and I haven't checked the news on it, but I did put a line right there. You can see there's support right here, and we hit that support yesterday, and so far we're moving up. And just I do see a pending potential bearish cross on the PPO, but my overriding factor or determination here to stay long sugar is this divergent low right here. We have strong bullish divergences leading into that low, an impulsive breakout, and this so far is just a correction. We were near-term overbought, so if we can continue to rally, especially if we can take out those two red candles, those previous red candles, I think that opens the door for a move up to any of my other targets up here. That target, these might not be exact. I think we can work our way up to this green line. That's about 31.56. This target here, that actual resistance levels at 27.69 or so right there. And again, let's see if sugar can hold here, rally up, take out those highs. Otherwise, if we go much lower below yesterday's lows, again, the market's closed today as I'm doing this video. Here's what we did today. We were up about 1.8%. I want to see us hold yesterday's lows, especially on a closing basis. Or we may go on and make another low. Maybe we come back and back test this trend line at lower levels, and then sugar doesn't look so good. So I wouldn't give it a lot of room if you're still long sugar. Again, a close below yesterday's lows won't look so good. All right, next up would be, I might as well touch on Kane. Some of you might want to trade this one instead of SGGB or SGGFF, I'm sorry. Kane is another ETN, and same story. Breakout, well-defined downtrend. The divergence doesn't show here. But either way, we've had a pullback in the last couple days. If we can rally, I think we come up here to this 880-ish level at least in possibly any of these targets down the road, but that's Kane. NIB, this is a cocoa ETN, taking it on the chin. We recently had, this was been a long trade a couple times, maybe in the unofficial short trade up here. Actually, no, we had a short trade that just had the stop clipped on it barely one day and then went on to play out. And I post an update at the time. I reiterated my bearish outlook and bearish bias on this one, and it played out and then some. Now it hit that trend line. I was looking at it here as a potential bounce trade. And, there was support level right here on this line that is at 29.88, and we did bounce one day off it, but boom, broke that support level and impulsive selling so far. However, with all that being said, we are now coming up to a very, very significant support level, and I'm referring to this multi-year or at least year-long basing pattern here in NIB. Um, and you can see that really was where we broke out and started this advance. So we're coming up on that support now. We're also becoming quite oversold. Last time we were oversold was right here. You can see what happened after that. Go back in time, we were oversold here. You can see what happened after that. So you get the point. So it's certainly not objective to short or to even stay short, in my opinion. If you are short right now, we may have a long side opportunity here. I'd have to really check the charts, the 60-minute charts, make sure they confirm. I haven't had time to do that yet. Let's just look at futures if I can. Here's a daily chart of cocoa futures. There was that support level, and this is again that basing pattern here in cocoa futures, right around there. So we're coming up on that now. Let's see if anything stands out on the 60-minute chart right now. I haven't really had time to go over this chart. No, I'm not crazy about it. I'm not going to step in and try to catch this falling knife just yet. We'll just have to watch this one for signs of a reversal. Next up, JJGTF. This is the grains ETN. We've had this as an official trade recently. Hit both of our targets, our first and final target, and has since been wedging its way up. I pointed that out. The last long was based on this divergent low here, and I pointed out we've been diverging here, negative divergences. We've pushed higher within this wedge type pattern. It is at support, and it may play out. This rising wedge. Remember, we're coming on the heels of this divergent low here, so this one may not play out for much more of a correction. There's some support below. Let's just say I'm neutral on this one. I don't want to step in yet. I don't have any desire to step in front of these divergences. Even though these trend indicators, that PPO is above the zero line, when you look right here, the white line, as long as it's above the zero line, the trend is bullish. And when it's below, like it was back here, from this point to this point, the trend is bearish. So that's one trend indicator that remains bullish. However, again, with these divergences, and JJGTF, the grain ETN, is a combination of, I believe, 3 grains: corn, soybeans, and wheat. And we'll look at those charts in a second. So let's just wait for some evidence for that one to firm up. DBA is another ag ETF. And this one has, various commodities in it. And what stands out to me really is this downtrend line. So it appears to me DBA is really basing. We go back to a weekly chart, you can see this. It looks to be sold out. There's big divergences here on the weekly chart as well. So I think it's a matter of time. I continue to be longer term bullish on commodities. I think they're going to be an important part of everyone's portfolio going forward, with equity valuations at nosebleed levels. And with the Fed on a rate hiking cycle, historically that does not bode well for stocks. Yeah, they had a little fit earlier this year, but they're still challenging their highs or all-time highs right now. But again, we know that party is going to end sooner or later, and this is an area where there's a lot less downside, a lot more upside potential. Again, that's a weekly chart of DBA, and there's that downtrend line. So going back to the daily chart, the story is this: I can't make a case to step in and buy right now, but I do think when we have a solid break above this trend line, that's most likely going to give us a good buy signal. We'll see if the charts confirm at the time. And from where we're at today up to my target, my minimum target here, swing target, longer term, would be that $21 level. That's about 13% above where we're at right now. Again, a little more work needs to be done. We'll keep an eye on it. Wheat, again, one of the components or within the JJGTF, the grain ETN. There it is. You had this divergent high. You had these 2 targets here that were hit. That I can't remember if that was an official trade or unofficial, but almost perfectly right up to that 690 level and then reversed. And we've worked our way. We're wedging higher, not by coincidence. This chart's going to look a lot like JJGTF because this is one of the three components. But again, we may come down. There's not enough meat on the bone for me to short it here. There's only, I see, to support is about 3 to 4% or so below. So I'm just going to watch this one for now. I don't want to spend too much time talking about it because I don't want to force a trade long or short on that one now. And then corn is another component of JJGTF. And this one has broken now below this trend line. As of yesterday, you can see we had a minor uptrend line off the lows and actually pretty well defined uptrend line. We broke below it, and that also comes on the heels again of a divergent high. So component of JJTF. So all these components are tracking very similar. And I don't know if it's the tail wagging the dog. Sometimes you get that. If an ETF has a lot of assets coming into it, inflows and outflows can actually affect the underlying commodity in some cases. And I don't know if that's the case with JJGTF or not, but it is certainly a possibility. Soybeans, SOYB, here we have a potential uptrend line. I had a triangle pattern here, but we sliced through it a lot. Not this line, I had a different line. Either way, what I'm watching is this downtrend line. Let's just see what happens there. You can see that soybeans have been stalling every time we hit this downtrend line. Maybe a trade if they take that out. And then probably as importantly, let me move this line up here. I would say this line here, we'll color it green, give you the value about 1950 or so. I think it would be bullish. Again, this is what I'm looking for. We need to take out this downtrend line and then take out that 1950-ish level, which are these two previous reaction highs. If so, that probably brings us up to challenge these late 2016, late 2017 highs around 2025 right there. Just going through these, like I said, in random order. This is OILNF, used to be called, formerly known as OIL. A lot of these ETNs, especially from iPath, they changed their ticker symbols. This is going to look a lot like USO. Anyways, we're below trend, as you can see there, after divergent high. So every chart I look at on crude looks the same. UNG, again, don't even bother. This doesn't look really, doesn't mirror natural gas prices that well. If you want to trade nat gas, you have to look at nat gas futures, in my opinion. Even if you're going to trade the ETN, you need to chart off these. You can see here recently we had a divergent high. I'll show it to you here. Well, you can see it on the chart. It's already drawn, but I didn't have all the lines drawn there. Negative divergence on the MACD, on the RSI, here on the PPO, right there into that divergent high, and then boom. Nat gas is a mover. When it wants to run to the upside or the downside, it goes quick. But if you are trading it or curious about it, here's a very well defined support level around $2.86.5 or so. And you can see some of the other levels on the chart. I'm just not trying to force anything. It might be nice if we do take that level out, undercut it or match it, come back down a little bit here and then reverse. You'll see there's a potential for a divergent low. Comes right on the heels of divergent high. I don't know. I don't really right now. Sometimes I actively trade nat gas. I'm just kind of staying away from it at this point in time. I don't feel like getting chopped to pieces because I don't have a great read on it. But then again, that's also a function of my focus really hasn't been there much lately. But yeah, looking at this trend line, maybe we're below trend. So yeah, stay away from that one for now. COWTF, livestock. This one I've mentioned recently. We have this very well-defined former support, now resistance level. You go back in time, back here to 2016. We had a lot of reactions around that level. And then in late 2016, early 2017, that acted as did a bang-up job of support. Look how many reactions on that level, and once again, a bang-up job of support right there. So here's an ETN that's behaving very well to this level. Now, the whole thing is, remember, support in technical analysis, support once broken then becomes resistance. So right here, we finally did break support. And as is often the case, if it's a very well-defined level, there was an impulsive sell-off immediately following that break of support. And now we've pushed back up. And as I said, support once broken becomes resistance. And you can see that line, that yellow line has been acting as resistance. So what do we have from here? Well, it looks to me like sort of an ascending triangle pattern. If you take this line here and that resistance line. Ascending triangle patterns are inherently bullish, so we do have grain prices falling right now, and that will help livestock because that's one of the biggest inputs or costs for farmers livestock is, of course, grains to feed the livestock. So if grain prices continue to fall, we'll probably break above this ascending triangle pattern. There's my first target there, something like this, a little pullback, and then power on up here to that second target. All three of these lines overhead are potential targets. But again, you need to see an impulsive break and or a close. Sometimes you get these little whipsaw signals right here. Here, we had a whipsaw signal here, so that's why sometimes you need to see either a solid impulsive intraday break or a close to maybe add to a partial position taken on an intraday breakout there. All right, let's see what else we have. Oh, coffee. Forgot about coffee. Yeah, this is an active trade right now. JJOFF, the coffee ETN, still looks good. I talked about this the other day. We had what I call an errant print. This candlestick here technically there was a print here. Let me pull that up and show you what I'm talking about. I mentioned it in the trading room that day. I pulled the charts of the futures, coffee futures, and they did not have anything close, remotely close. That resembled this drop. So coffee prices did not drop that much. Sometimes with ETNs or even some stocks, you have a fill that comes away from the price. Now, I've circled it here. You can see before in pre-market trading, we had a couple trades here. They were all at 1430, 100 shares. This is the number of shares right here for the price 1430, 929. Then the market opened and somebody was filled just one trade, 100 shares around lot at 1360. I have my theories as to what happened. Maybe somebody, an inexperienced trader, put in an order, a stop loss order. They intended it to be a stop loss order at 1360, but put in a buy limit order or something, that's some kind of buy order. Either way, there might have been a fill there at 1360, but it did not. It was brief, and you can see just a few seconds later, the next fill was right around that, and every other fill thereafter was around that 1430-ish level, 1425, 1425, 1431 in the seconds that followed. So what that tells me is this did not trigger the stops. It did not trigger, sometimes if you have a mini crash where the bids collapse in a stock or an ETN, prices fall down and then the stops start getting hit and it's a vicious cycle. That didn't happen here. So this was, again, what I refer to as an erroneous print, and didn't occur in the futures either. Didn't run the stops, trigger any other stops, and snap back right back up where it was. So this one's still in play, and that's still the stop. Anything below 1380. And as of now, I like it. The last couple days, we've seen last 3 days some selling pressure. But remember, we're coming off this big divergent low. So right now, I view this, it trade like any trade. It may or may not pan out. But so far, we have a breakout above a super well-defined downtrend line, very well-defined downtrend line, a back test, which was successful, and a thrust up. So this may be a little corrective wave on this move up to any or all of these targets. And if we're stopped out, so be it. But I don't see anything in this chart that warrants changing my trading plan. When I go into a trade, I have a trading plan where I'm going to buy, what I'm going to buy, where I'm going to buy it, and then where I'm going to take profits if I'm correct, and where I'm going to exit. In other words, my stop if I'm wrong. And if anything compelling changes, sometimes I'll modify that trading plan. But right now, I don't see any reason. Just like any other trade, it's a small piece of a pie. If this one gets stopped out, move on. We'll hit it again the next time it sets up. Otherwise, hang in there, and this one may very well play out. All right, next up, this is BALTF. This is a cotton ETN. I don't know what happened yesterday. I wasn't watching this one at the time. I do have a uptrend line right here. And you have this huge red candle. That would have been a drop from the previous close. Let me try to grab that. That would have been a drop as much as 11%. That's a little suspect to me. Let's look at futures. We see here a drop. Yeah, not that much. Not yesterday. Here's today's value. We were down today. Yeah, let's just keep an eye on this one. I don't have a strong opinion on it. There is a trend line. Here's the cotton futures are still above trend in an uptrend. They did recently put in a divergent high, so I wouldn't be chasing them here. I wouldn't be buying this dip. It looks like a heck of a run they've had. I'm drawing out the divergence lines for you. You can see down on the indicators on the PPO and the MACD. down below versus prices making a higher high. So near term, does 60-minute charts tell me anything? That was that same line I drew there. No, not too much. Let's just move on from that one. And again, I don't know. The ETN might have suffered a maybe this is very thinly. Yeah, it is a thinly traded. I look at the volume bars, and especially recently, the volume's almost non-existent. So let's just stay away from that one for now. UGA is unleaded gasoline. I haven't touched this chart in a while, but you can see here we've fallen now to trendline support. Remember, crude has broken trendline support, but gasoline hasn't. And we're at trendline support. And this is probably if my near term call for a rally in crude pans out, then this will probably rally as well. Let's look at the 60-minute chart, see if there's a trade to be made. Yeah, same story. Again, if these divergences play out, the market's closed today, so these are closing prices, but there it is, bullish divergence just like USO. And this one will track a lot like crude oil. Gasoline prices are going to track very similar. And here's one that hasn't yet broken out, so there's a potential setup if you want a trade idea. Again, if you're trading this and crude, you're virtually putting your eggs in the same basket because they're going to trade very similar. However, potential upside on this one to the bottom of that gap at 35 is about 4.3%, 4.4%, and then about 5.8 if that gap is backfilled. And that would be my maximum target. This is my preferred target right here, 35. Again, you need to have a breakout of this wedge to confirm a buy signal on UGA. In wood, I've been talking about this one forever, and I've been waiting patiently for the right moment to add this as an official trade idea, and that may come very soon. Lumber prices have already come off their highs. They've had a hell of a bubble in lumber prices. It's been a combination of a lot of forest fires in the recently, as well as the embargo against, not embargo, I'm sorry, tariffs on Canadian lumber into the U.S. So that really caused a big spike in prices. We broke down below that trend line, kickback rally, divergence continues to persist. So this one's setting up, and I may add that as an official trade idea soon. Just wanted to update it that it still looks very toppy. Cut is just another ETN or ETF, I should say. These are ETFs that track not directly lumber prices. They hold forestry and timber companies, not lumber futures, unlike a lot of the other ETFs or ETNs that hold futures contracts. Coal, Van Eck Vectors Coal ETF broke trendline support. I mentioned recently put in this divergent low right here and has rallied back up to resistance. I'd just stay away from that one. I don't have a strong opinion on it. JJUF. Here's copper. Copper took out this downtrend line with an impulsive move today. Big breakout, impulsive move up. So maybe that one wants to run it. The bigger picture was it put in a divergent high back here where the crosshairs are followed up. This was a divergent high, and it had since corrected right down to the support level here, the support zone. And yeah, so the fact that it took out this primary uptrend line following a divergent high makes me a little suspicious of this breakout. I don't know. If anything's possible, maybe it wants to come all the way this late in the game and backtest that trend line from below. But I don't know. Again, I'm being a little extra selective right now in trade setups, especially with the FOMC meeting next week. I'm not in a rush to take a lot of new positions in front of an FOMC meeting. So maybe for the next week or so, we kind of trade around sideways. But I'll get to my next video. I'll update some of the existing trade ideas as well as some of the other trade ideas that I'm watching right now. There's potential or unofficial trade ideas. So we'll wrap this one here. This has been Randy Finney with Right Side of the Chart. As always, if you like the video, please give it a thumbs up on YouTube. That'd be much appreciated. And have a great